Stocks trade ranged with advance and declines evenly balanced. Utilities and consumer durables eke out gains, while FMCG and auto drag. Hindustan Unilever misses Q2 volume growth expectations on a dip in personal care and food segment. The management echoes peers, pointing to an urban slowdown as the culprit, even as pickup is seen in rural demand. French aluminium maker Constellium reports a weak performance for the quarter on the back of weak demand in aerospace and auto segment. Hindalco arm Novelis a significant exposure to the autos hurt sentiment. Escorts Kubota strikes a deal with Sona BLW for a sale of its non-core rail business for rupees 1,600 crores. The transaction reported earlier by CNBC-TV18 pegs the valuation a tad lower than expected. Reliance and Nvidia will partner to build India's AI infrastructure. Jensen Huang, the Nvidia CEO, announced during a fireside chat with Reliance Group Chairman Mukesh Ambani, who divined that India will become one of the largest intelligence markets in the world. Hello, good afternoon. You're watching Business Lunch on CNBC TV18 and I'm Vinny Motiwala. Quick look at the markets. Like we said, it's a range-bound session that's coming in. Not much of an excitement. As of now, Nifty at 24,398, so just below the 24,400 mark, down 0.1% in trade that we're watching out for. Let's pull up the mid and small cap because that's not doing anything exciting as well today. Pretty much in tandem with what we're seeing for the benchmark indices. So Nifty mid cap is down 0.2%. Small cap also we're seeing a similar trend that is coming in. Nifty Bank and PSU banks, that's where we're seeing some bit of a positive move coming in. Nifty Bank just trading slight bit with a gain as of now. 0.6% of gain we're seeing for the Nifty Bank. So not slight bit recovered from the day's lowest point. So Nifty Bank is there. Nifty PSU Bank is up 1%. These are among the top sectoral gainer. Now, which is the top sectoral loser today? We have the Nifty FMCG, which is clearly under pressure today. Look at HOL, that's down almost 6-7% in trade after its numbers. And the FMCG pack as a whole is under pressure. Let's pull up Colgate if we can, because that reported its numbers a short while ago. So we should be keeping an eye out on Colgate. Seems like it was a good volume growth, but EBITDA is something that was a bit of a disappointment. So yes, Colgate also is under pressure. But let's carry forward and begin the discussion on Business Lunch today by focusing on some of these FMCG earnings. We had Hindustan Unilever second quarter numbers, slight bit of a miss from what the street was expecting. Net profit was nearly down by 4% on a year-on-year basis. What more are the details for that? Mangalam is joining with us.
Well, HUL is the top Nifty loser in today's trading session, and that's largely on account of three factors. The first one was the results were slightly shy of expectations. Anyway you cut it, the revenues slightly shy of street expectations at 15,500 crores, volumes coming in at 3% versus expectations of 4 to 5%, and that trickled all the way down to the EBITDA and the net profit as well. Even if you look at the segments, while there was notable outperformance from home care and beauty and wellness, personal care actually deteriorated by 5% in terms of revenues, and food and refreshments declined by about 2% as well on account of macro weakness in the tea business. The second reason that the stock is under pressure is because of an explicit call out in terms of urban weakness coming in from the management. They have said that even as there is gradual recovery in rural, urban growth has seen some moderation, and this, remember, accounts for nearly 2/3 of their revenue itself. There is raw material inflation which is going to inch up, and as a result of which they expect low single-digit price growth. Could that have an impact on the volumes or not is something that the street is still divided on. Important to look at the EBITDA margins as well. At current levels, the management believes that they will sustain going forward. And the third big reason, brokerages, not very perturbed by some of the positive statements that have come in itself, and they are actually cutting their EPS estimate. So JP Morgan has cut their EPS estimate by about 3% on the back of marginal moderation in revenue forecasts. So they've cut their target price to 28.70 as well. Morgan Stanley has an underweight call on the stock, and Jefferies too has a buy call, but they have a target price of 31.30 on the stock.
Thanks so much for that, Mangalam. But FMCG majors, most of them have highlighted a slowdown in demand this time. The management of HUL, Nestle, Tata Consumers, and even Pidilite pointed to that there's a pain in the urban markets, while rural is seeing some bit of a recovery. Let's listen in.
The rural markets have been on the recovery path for some time and continue to recover gradually. And please note that it's about a third of our business comes from rural areas, and 2/3 comes from urban areas. In the recent near term, we have seen a certain slowdown in the urban markets. They are continuing to grow, but the growth rate is trending down. And on the whole, therefore, the markets are slightly down compared to where they were, say, a few quarters back. Now, it's a near-term phenomenon, and it could be driven by various macro factors that could be short-term and long-term in nature.
I do think once the entire Kharif, this thing happens, you will see a far more buoyant rural economy. That said, on the urban pace, I wouldn't say that much, but there has been an impact of all the flooding, etc., in various parts of the country. Food inflation. I think we have not, I would say, seen the full impact. For the middle income person, I mean, food inflation is a reality, and I think that has hit a bit. So across various categories, if you see, four-wheelers are slowing down. Other competitive FMCG companies are talking about stress in urban. So you look at various indicators, all of them are indicating a little bit of stress.
So I think this question will really be best answered in January to see, listen, are demand conditions really subdued as a result of external factors, or is there an issue with consumers? I mean, we know that rural markets have been subdued. I mean, it's simple mathematics. In over 3 years, if you look at rural incomes versus rural inflation, there is less money in the hands of the rural consumer. I mean, that's an obvious fact, and only companies that have therefore substantially invested and have a penetration opportunity like ours have done well in rural India.
Okay, and speaking to reporters, Nestle's chairman and managing director Suresh Narayan also said that the FMCG sector is witnessing a slowdown in demand as the middle class shrinks. And however, he also pointed out that the demand for premium products remained quite high. The Nestle MD also said that the demand pressure points were coming from the mega cities and metros, and noted that as opposed to the earlier demand slowdowns, which used to be last for a quarter or two, the current slowdown in the demand has lasted for 2-3 quarters. He also added that the bigger cities were seeing a change in consumer behavior, with people preferring quick commerce and e-commerce options. Okay, on that note, we'll slip into a short break, and as we do, a small programming note as we prepare to ring in the festivities this Diwali. Tune in to CNBC TV18's Market Movers Forum today, 3 p.m. onwards, featuring guests like Ramdev Agarwal, S. Narain, Nilesh Shah and Navneet Manoj to help your portfolio prosper this Diwali. Welcome back. You're tuned into Business Lunch on CNBC TV18. Let's move on. And Unicommerce, which is a part of Snapdeal Group, has become the first e-commerce software as a service startup to list on the Indian bourses. Until 3 years ago, nobody would have believed that Unicommerce could have had such a successful listing. Snapdeal's co-founder Kunal Bal tells Shireen Ban. He also talks about learnings from Snapdeal they applied to build Unicommerce. And here's a snippet of that conversation from the new episode of our brand new series of Young Turks Reloaded.
2023 and 2024 in terms of IPOs and in terms of exit options becoming much more of a reality, and many of the companies that you backed, I mean, when is your IPO coming, by the way? But you know, many of the companies that you backed have IPO'd, Kunal.
Yeah, so I mean, not only backed but built, right? So Unicommerce, which is also part of our group, oftentimes, you know, Snapdeal hogs all the headlines, clearly, right? And our Unicommerce, which is obviously a B2B software business, and actually the first SaaS company to list in India.
Yes.
We had acquired this business in 2015, primarily to run the software for Snapdeal's warehouses. And before we knew, over the next few years, we realized that many other brands and platforms wanted the same software, so we started selling it. to fast forward 7-8 years, now it's a listed company.
Yeah.
Right? So I feel that there's such a big learning in that. I can tell you nobody would ever put their money on the thought even won't occur to them maybe 3 years ago or 2 years ago that Unicommerce would get listed, right? And have a very successful listing. At the time when it listed in August 2024, it was, I think, the second most subscribed IPO of 2024.
Yes.
In the end, if you build a profitable business that maybe is not growing at 100%, 300% a year, but it's compounding year on year, eventually you will be able to access the public markets. Because venture capitalists oftentimes will push companies. We have seen that also. We have experienced that also. They'll push companies to grow very fast.
At the cost of everything else.
Right. We have raised zero primary capital to build Unicommerce. Zero. We never raised a single rupee of primary capital. So it is doable. It can be done, and hopefully it serves as an inspiration to other founders. That, don't go for this growth at any cost. We have been there and we feel that it's not the right thing to do.
Okay, on that note, we're going to slip into a short break, but don't go anywhere, because after the break, we'll get you a fun chat between NVIDIA CEO and Reliance Industries Chairman Mukesh Ambani at the NVIDIA AI Summit in Mumbai. So stay tuned in. Welcome back. You're tuned into Business Lunch on CNBC-TV18, and it does not get bigger than this. In a fireside chat between two big names at the NVIDIA AI Summit 2024, Reliance Industries CMD Mukesh Ambani and NVIDIA's Jensen Huang joked about the origins of NVIDIA's brand name and what NVIDIA means to India. Let's take a listen.
We are in what is the Geo World Center, which is new, which is built by my wife. So if I don't say it's built by my wife, I was instructed to say that.
I'm at her house? Her house is bigger than your house. And I thought your house was pretty big. Just so you know, from Mukesh's house, I could see my house in California.
So, and while I was listening to you, you talked about NVIDIA being an exotic place. And I was thinking that when you are in India, I've got to give you my version of what NVIDIA means to me. And I was just thinking about it backstage. There's a very important word link which is called Vidya, Vidya. Right? And in Indian, in Hindi, as we are all determined to make the best LLM in Hindi, right? In Hindi, Vidya means knowledge.
I knew I named the company right. I knew it.
So
everybody said, NVIDIA, what a horrible name. You will never make it.
So what it means...
I knew it. I stuck with it.
So you can take credit for this interpretation.
Gosh.
No problem. Right?
As we said, it doesn't get bigger, and you can tune into watch the entire conversation between Mukesh Ambani and NVIDIA's Jensen Huang at 6 p.m., 8:30 p.m. and 9:30 p.m. later today, only on CNBC-TV18. And with that, it's a wrap on this edition of Business Lunch on CNBC-TV18. Thanks so much for tuning in. Up next, Midcap Radar.